Hello, everyone. First of all, I'd have to apologize for starting the session late. We had a few technical difficulties. Um, whilst technology has been very useful in connecting us and in the particular context of this conference, has enabled many of us to attend from the comfort of our homes. As we all know, sometimes technology acts up, and when that happens, we are compelled to endure the inconveniences, the resulting inconveniences. So I welcome you to this panel on public-private partnerships and economic development in Africa. We have a very, very high-powered panel comprising two very distinguished individuals from the continent. We have Dr. Ernest Addisson, who is the governor of the Bank of Ghana, an office which he has held since 2017. He has over 25 years of solid experience working as an economist at the Bank of Ghana, at the West African Monetary Institute, and at the African Development Bank. In 2020, he was elected. He was appointed the chairman of the board of governors of the IMF and the World Bank, and he is also the co-chair of the FSB's Regional Consultative Group for Sub-Saharan Africa. Most importantly, he is a Cantabrian. He earned a master's degree in economics and politics from Cambridge. And so we're very pleased to have you here, Dr. Addisson.
And yes, thank you very much. Thank you very much.
All right, you're welcome, sir. You're welcome, sir. We also have Mr. Samaila Zubairu, who is a very distinguished development practitioner, and actually he has been at the forefront of infrastructural development in Africa. He is the third president of the Africa Finance Corporation and also the chief executive officer. He has over 30 years of thorough professional experience in entrepreneurship, infrastructural financing, and financing and development of infrastructure. And before he took on the top job at the AFC, Mr. Zubairu was the CEO of Africa Capital Management. And in that role, a joint venture which he championed resulted in the establishment of the Nigerian Infrastructure Fund, which is actively financing infrastructure. He's an Eisenhower Fellow and was actually the first African to be appointed to the Board of Trustees, and he holds several non-executive board positions. So you can see how very distinguished our panelists are, and we're very pleased to have you here, Mr. Zubairu.
Thank you very much. Thank you for having me.
So, I mean, we're talking about public-private partnerships and economic development on the continent. But to set the tone for our conversation, before we go into the specifics of PPPs and economic development, let's briefly start off by poking around the business environment generally. Because, I mean, the business environment directly affects private sector participation, whether as small and medium enterprises or as project sponsors financing and developing large-scale infrastructure projects. So, Mr. Governor, it's often said that it is challenging to do business in Africa, and people often cite the World Bank Ease of Doing Business Index or reports to support that claim. But what is often lost in that narrative is the fact that on that report, there are 10 African countries in the top 100, there's an African country in the top 15, and there's another African country in the top 50. And in the past 6 years, African countries have consistently been improving their rankings. And these are positive strides that should be commended, applauded, and possibly replicated across the continent. So the question is, these countries that have performed very well on the World Bank Ease of Doing Business Index, what are they doing right? Can these things be, or can these measures be replicated in other countries on the continent? And in the particular context of Ghana, what has the Bank of Ghana or the Ghanaian government been doing? What measures have they put in place to enhance the ease of doing business, make and implement monetary policies that help businesses bolster private sector participation in the economy, and how can this be replicated across the continent?
Well, thank you very much, Kenneth. As you put it, the cost of doing business really is very fundamental if we are to attract private capital to be part of our economic development strategy. And at the central bank, we focus on the risks associated with the macroeconomy. You want to ensure that you have an environment, a macroeconomic environment, which allows the cost of business to be low, low inflation, stable exchange rate, all of which provides you with certainty about the future, and therefore reduces the risks associated with business. It also has to do with improving the investment environment. Now, if you look at the environment that is key for private sector, this includes the issue of political stability. If you don't have stable political regimes, you're not going to be able to attract private capital. Thirdly, you also need policy and regulatory stability. Policy and regulatory stability, that also helps to improve the investment environment. So these are the things that the government of Ghana has been sort of focusing on over the past few years. We have very much focused on reducing the risks associated with the macroeconomic environment, brought inflation down fairly drastically from over almost 16% to around 10% right now, trying to stabilize our exchange rate. In the last year, we were able to prevent the CD from depreciating. I think it depreciated by just around 3.9%. So these are the things really which helps to improve the macroeconomic environment. In our particular circumstances as developing countries, there are issues about availability of raw materials. There are issues about the utilities and how stable our utilities are. And then also recently, I think the issue of higher taxes is coming up. But in our particular area, the question of access to finance has also been key. And in the Bank of Ghana, we have tried to implement financial sector reforms, which has also, in a sense, helped to improve access to finance. Interest rates are trending downwards, and we have the Credit Reference Bureau, which helps to be able to distinguish between various applicants. And then also we have the issue of the collateral registry, which has helped. So broadly, these are the things that the government of Ghana has done. I don't know how much time I have. You can prompt me over the last 3 or 4 years to create that environment which promotes private sector development.
All right, thank you very much, Mr. Governor. Mr. Zubairu, I mean, the AFC as a DFI would probably qualify as private sector finance in this context. So I'm sure you have a different view. But what has been your experience? I mean, investing in countries, how have countries responded? Are there some countries that are more friendly to private capital, private sector investment, and are there other countries that are a lot more hostile? And what do you think the hostile countries or the countries that are not so friendly could be doing better to make themselves attractive to private capital?
Thank you very much for that question. So there are several aspects of this. I think I'll start by, probably defining, what AFC was really set up to do, to put it in context. So in 2007, a couple of African leaders, through the peer review mechanism group, identified some of the key challenges on the continent, which is access to finance. And they looked at all the institutions that were intervening in the continent and realized that there was need for more Africa-focused financing for infrastructure, because it was a major challenge at that time. At that time, the investment required for infrastructure was about $30 billion per annum. That has since grown to about $170 billion per annum today. And the key issue at that point in time was that while there was this huge investment requirement, there were no projects, to finance. And so that was mainly because of the approach of most development finance institutions at that time, which is bring us a bankable project and we'll finance it. So from our very early days, we decided that the key focus for Africa Finance Corporation will be to de-risk the opportunity in such a way that capital can flow into it. So we set up, bearing in mind that there are several opportunities on the continent and that require de-risking. So Africa really is a rough diamond. We just need to polish it in a way that it will be attractive. So that has always been our approach. So we've always taken the view that our mandate is to develop and finance infrastructure, natural resource, and industrial assets that will enhance the productivity and economic growth, of our continent. And we have done that by focusing on energy, transport and logistics, natural resources, heavy industries, and telecom. In that regard, we've mobilized over $9 billion across the continent, investing in over 34 African states. In particular, we are one of the big investors in Ghana. We've invested in quite a number of projects in Ghana, and we're continuing to look at opportunities to invest in Ghana. So I take it from one of the points you raised, where you mentioned that 6 of the 10 fastest growing countries on the globe are in Africa, and that is a key point for consideration around attractiveness of those countries as an investment destination for mobilizing capital. So before now, Africa's GDP recently contracted as a result of COVID, and we've seen a contraction of about 3%. But we expect that in the period 21 to 2025, we should see some kind of recovery, where African countries should be growing at about 4%. And that is a good avenue for mobilizing private capital on the continent. If we look at the trends on infrastructure spending, which is an area where we focus mainly on, African countries have been the largest investors in infrastructure spending on the continent. The private sector has been making investments, and that has been increasing. So for the first time in 2018, the infrastructure investments on the continent crossed the $100 billion mark. And we are seeing that trend is continuing. And it's continuing because we've seen increased private sector financing. So like I mentioned, we see our role mainly as one of de-risking opportunities on the continent that will attract private capital. And we do that by investing our own capital to de-risk the opportunities so that we can distribute those opportunities to others. And we have very good access to capital. So we have an investment grade rating, one of the few financial institutions with investment grade rating on the continent. So as recently as 3 weeks ago, we did a Euro bond for $750 million at 2.9% for 7 years. So that speaks to the quality of our credit. And we continue to do that because of our focus on de-risking opportunities and distributing them to other players that are looking at investment on the continent. I'll give you some examples. So we have a wind farm that we're developing in Djibouti. There we took the initial steps to de-risk the opportunity with our own capital. And then we invited FMO, the Dutch Development Finance Agency, and Climate Investor One to come into that project. And we came up with something new in that project. We came up with a construction finance bridge or equity bridge, because one of the challenges we have is it takes time for banks to get to financial close. So from the time you start doing a project to financial close, it can be 2 to 3 years. So we decided that, look, as Africans, this is our continent, this is the only place we can invest. So we need to be able to deploy capital faster, knowing that once we can identify certain key elements for bankability, put it in place, we would be able to start construction. And construction is one of the biggest risks for projects. So one of the biggest project finance risks is the construction and completion risk. So we took the view that if we can cross this hurdle for most investors, capital to be able to flow faster. So this this is our second pilot. We've done an earlier pilot in Cote d'Ivoire with the same principles. So here again, we decided to go to construction. Immediately, we got the PPA sorted out, and we got all the permits sorted out. So we started construction, and we hope to complete construction by the end of this year. And by that time, we'll be able to attract the debt capital providers to come in, because at that time, they have an earning asset that they can invest in. But fortunately for us, because of the massive liquidity in the global markets and our access to capital, we actually did a green bond last year to raise the debt component that will go into the project. Now, that debt component that we raised, we can actually do two things with it. We can put it into the project to provide the debt, to take out our equity, which is to essentially recycle our capital, or we can allow other participants to come in, like African Development Bank and other DFIs and other commercial, including local banks, because we have a way of giving them the capacity for long-dated papers. So that will go in there, and we'll be able to recycle our capital and do other things. So in summary, we are at the forefront of mobilizing private capital, and we continue to do that. One of the challenges of doing that is the risk perception of Africa. Now, it turns out that Africa has this blanket risk perception, which is not true. The only place that is less risky than Africa in the world today is the Middle East, where I think their project finance default rate is about 2%. Africa is about 5.3%, which is the same rate as Western Europe, essentially the same rate as Western Europe, and also lower than the global average for default rates. So I was reading, connecting to this chart, I saw changing the narrative for Africa as one of the key objectives. So these are the things that we can do to change the narrative. We need to make clear what the data is. We need to make available data for objective assessment as opposed to just, blanket assessment based on news reports here and there. So I think that if people know more about the default rates on the continent and about the attractiveness of infrastructure as an asset class, if you put that side by side, the massive liquidity and even a negative yield environment in Europe and other parts of the world, Africa will be able to attract a lot more capital to work because we have significant opportunities. So, for example, for energy alone, we need $50 billion annually. And with this energy transition and the massive energy deficit that we have on the continent, there are significant opportunities for private capital to flow into the continent to support African governments in their quest to transform our society. I mean, I can go on, but maybe I should just stop here for another round.
Access to finance has been a big problem, and the primary factor fueling that problem has been the risk perception of Africa. So we need to own our story and let people know that Africa is not necessarily as risky as we are painted to be. But looking at looking at the context we're in now, the pandemic. Before the pandemic, the government budgets were already strained, and now on account of the responses to the pandemic, the strain on government budget is even much more significant. And what the pandemic has done is that it has demonstrated to us how deep the infrastructure deficit is, particularly in the health sector, and has also probably further deepened that deficit. So, Mr. Governor, let me start with the governor. What do you see as the value of public-private partnerships in reducing or eliminating the infrastructure deficits in Africa?
Well, I think it's very clear, as you put it, that the government alone cannot do all the work. I mean, given the burden that it's already carrying in terms of the impact of the pandemic on budgets. You look at the debt GDP ratios all over Africa has gone up. There are questions of the sustainability of public debt. I mean, in Ghana, we had gone through nearly 3 years of fiscal consolidation, brought the deficit close down to around 4 or 5%. And then, as a result of the pandemic, we find ourselves with deficits going back into double digits. And then we have to reset the economy again, come up with a 3-year macro program which will try to bring down the level of debt and deficit. So private partnership, it's really important in that context. And if you look at the opportunities for the private sector, as my colleague said, they are there. You just have to look at the various sectors in our economy. There's a lot of private capital in the telecommunications sector, for example. I think the energy and oil sectors are also attracting private sector capital. But there are more, other sectors that are more difficult, to attract that kind of capital. And this issue of de-risking, those types of projects become very critical. I think that African governments must be ready to open up and also, sectors that were previously not available for private capital should be opened up, and the government must be interested in having cost-effective tariffs in some of these areas. That will help address this issue of lack of capital to help project development. Now, as you said, the pandemic, I think, has, in a sense, set us up, but growth is rebounding. If you look at the growth performance, fortunately for us in Ghana, we have had a positive growth in 2020. We are looking for a fairly significant rebound this year to about 5%, and over the medium term, probably 6 or 7%. And that type of growth, I think, helps to attract private capital. It makes projects which probably would have been marginal in terms of credit, bankability, become more bankable and therefore attractive to the private sector.
Thank you, Mr. Governor. Mr. President, for the private sector, you are in the field, you see the trends, you see the opportunities, and you see the challenges. How has the pandemic helped? Has the pandemic made the opportunities much more visible, and has the pandemic exacerbated the challenges?
Thank you for that question. I'll start by addressing or making reference to one of the comments made by Dr. Ernest Addisson. He said something that was very, very important around what governments can do, to attract private capital, which is having cost-reflective tariffs. That for me is at the heart of the opportunity to grow the energy sector in Africa and to overcome the energy deficits that we have on the continent. So if you check globally, energy is one of those areas that attracts the most investment.
Yeah.
Essentially, energy and transport. They typically attract 80% of investment in infrastructure globally. And the same trend is repeated in Africa. But we've seen a disruption in that trend, as over the last 3 years when African governments came under pressure, with their debt to GDP ratios and their ability to honor commitments under various PPAs that they had agreed to. So we have similar challenges, but we've kind of shown understanding because we know, which is one of the reasons why it's important to have African institutions, because we know that Africa as a continent has very low default rates. So even though there are challenges and for one reason or the other, they are not able to do what they need to do, they will come back to it, because we have that commitment that we honor our obligations. We prioritize our obligations, even sometimes to the detriment of our own development. If you check, interest payments or debt service is a big part of the revenue budgets for African states, but they continue to do it. So it's important that we all agree that we should honor our commitments, and when we have these cost-reflective tariffs, we should honor them, especially because we need to always have that framework in place to attract private capital in the first instance. And we're not the first people to do so. So most parts of the world, you come up with these frameworks, to make the industry attractive, and then once people start to come in, then you kind of chip away at the benefits. So I give you an example. Countries start with having PPAs, government consent support agreements, full cooperation agreements, and then they take off the government support agreements, they take off the full call option agreements, they even sometimes take away the PPA, and then they have tolling agreements. Why? Because the capital has come in, which is one of the things that we need to understand as Africans, learn from other jurisdictions, and put in place frameworks for capital to flow. Now, back to your question. For us, we think that it is important that we continue to de-risk the opportunities for capital to flow into, because capital flows in for opportunities. They don't flow into legislation or talk. They look at profits and they try to get into those profits, to participate in those profits. Now, even people that want development impact, so institutions like Green Climate Fund that want a transition to renewables, and they have put in funds for that to happen. They still want profitable transactions. And the profitable transactions only happen when we have this public-private partnership arrangement where we do proper risk allocation between the government and the private sector. With the proper risk allocation, whereby government understands that they are supposed to provide the environment, provide the regulatory oversight, provide the framework for capital to flow. Private capital will come in, and private capital has continued to grow on the continent, and it will continue to grow once the environment remains the same for capital to flow.
Thank you very much. I mean, capital has indeed been flowing to those areas that have become attractive to capital in the past few years. And so looking at assessing the track record of PPPs in Africa, trying to determine how far they have gone in delivering economic development. So the question I'd ask, and I'd like to get both views on this question, is what would you typically consider when you are trying to determine whether a project developed and financed on a PPP basis is a success or a failure? And I mean, those cases that have been declared PPP success stories, why do we not see massive replication of those models across Africa? When I'll give a background, there are some massive PPP success stories. There's the Lekki Deep Sea Port, there's the Nouakchott port, which the AFC is strongly backing in Mauritania. There's the Lekki Turnpike, there's the Dakar Diamniadio Toll Road in Senegal, all of which are PPP success stories, but you don't find those models being replicated across the continent. If you look at in the healthcare space, there's the Queen Mamohato Hospital in Lesotho, which, I mean, the opinions are divided. World Bank says it's a success, the public sector in Lesotho says it's a success because of some of the financing terms. So when you look at all of these projects that have in one way or the other been described as success stories in the PPP space, we do not find them being replicated across the continent to close the infrastructure deficit gap. So the question then is, what are the parameters? How do we determine what is a success, what is a failure? And in those cases where we say this is a success, why are we not replicating those models across the continent?
So you want me to go first, or you want the governor to go first?
You can.
No, I think you should go first.
All right. Thank you. So for us, you make some very interesting points. We do have success stories on the continent for public-private partnerships, and once we have those success stories, we clearly can replicate them. So I'll give you an example. So the Nouakchott port you referred to is a result of a success story whereby, and also a public-private partnership that we commenced in Gabon. We had an agreement with the government of Gabon on how we could work together to help them diversify their earnings away from crude oil, from crude oil essentially, by looking at other aspects of the economy, such as forestry and mining. And we decided to build the Gabon Special Economic Zone as an expression of that. So that was a partnership between the government of Gabon through an agency called CDC of Gabon, as well as OLAM, and AFC. And what we did was to focus on the forestry industry at that point in time. Most of Gabon's forestry products were exported. And we said to them that they're losing value through that. And this is very important, because once we export primary products, we're highly susceptible to volatility in the global commodity crisis. And that's why we have this constant boom and bust cycles of our economy. Because once there's a volatility in the global markets, then we can't sell, mainly because commodities, primary commodities, they're bought, they're not sold. So you don't have bargaining power as a seller. It's only the buyers that have bargaining power. So we took the view that we should debottleneck that space. We should build port capacity for export. We should expand logistics access. We should have industrial parks for processing. And we should do the whole range of activities that was required to be able to attract investors into the industrial park to do the processing. And for that to happen, we banned the export of primary logs of wood. And just in quick summary, so that initiative resulted in Gabon earning, I would say, 5 to 6 times what they used to earn from exporting just a cubic meter of wood. Mm-hmm. In some cases, they're able to earn 40,000 euros per cubic meter of wood, because the whole process of preparation allows you to distinguish very rare wood that is probably available only in that geography. And for that, you command high premium. So we built a mineral port, we built a general cargo port, we built a container port. And we built an industrial park that created over 26,000 jobs in the country, increased export earnings by over 4 times in the country, and has allowed us to understand and prove the value accretive beneficiation of African commodities before you export them.
Yeah.
And on the back of that, we are building another industrial park in Benin and in Togo, there where we're going to focus on cashew, cotton, and other minerals. Just to give you an example, so a country that used to export raw logs of wood is now one of the world's largest exporter of veneer, one of the world's big exporters of furniture. So they, of course, stop importing furniture because they can make them within the industrial park. We have over 80 companies that have come in to set up within the industrial parks. In fact, we now have companies sending wood into Gabon for processing in that zone. So, which is a massive improvement. If we look at cotton and cashew, so one of the big advantages we have as Africa is that we're one of the largest exporters or producers of most commodities. Yeah. So, if you look at cocoa, 70% of the world's cocoa is in Africa. 70%. And most of that cocoa is exported as cocoa beans. I'm glad to say that the government of Ghana recently announced that they're not going to export cocoa beans anymore. Yeah. And I agree with them. Why? Because the value chain of the cocoa industry is over $100 billion. It's over $100 billion, and it's captured mainly in chocolates and other specialties outside the continent. If we focus on the value processing and value addition on the continent, we would keep the jobs related with that processing on the continent. We will keep some of the value. At the last count, I think Africa was having about 6 to 8% of the value. If you can just increase that by 3 times, it is going to be massive for us. And if we focus on chocolates for consumption within Africa, so we're not trying to produce chocolates for Switzerland. No, let's produce chocolates for Africans. Let's eat our chocolate. Let's produce the chocolates that we will trade within the continental free trade area that has seriously commenced. And we'll see the massive value addition in that place. Now, This success story that I mentioned is what has led us to Nouakchott. It has also led us to San Pedro Port. So the short answer is that there's significant opportunity to replicate success stories, and there's significant opportunity to even go beyond what has happened by extending the pilots in Gabon to Benin, Togo on cotton and cashew. Cashew again, I think about 60% of the world's cashew comes from Africa, where we're only capturing about 10% of the value by exporting it to India and to Vietnam and then back to Africa. So if we just put in place the infrastructure for the processing to happen as we have done, or as we're going to do in Benin and Togo, we'll see more jobs created on the continent. So, I mean, I can just go on and on because there's just so much, track record that has been built and so many opportunities for us. And more importantly, as related to your question around COVID, how COVID has exacerbated the opportunities, because COVID has done one thing. It has disrupted the global supply chain. It has made it clear that the world cannot rely on China for most of its needs. It has made it clear that we need to have manufacturing capacity on the continent for consumption on the continent, and also for taking advantage of the geopolitics that are happening between China and the US. So Africa, by virtue of our location, we're able to produce things that can be sold to the US, and we should be doing that. So my big focus now over the next 3 years is how can we enhance production capacity on the African continent, and we're working on doing that.
Okay, thank you very much, Mr. Zubairu. Just because we're pressed for time now, the last question, Mr. Governor, just commenting on the replication of PPP success stories, particularly in view of the AFCFTA. I mean, signing of the AFCFTA creates a lot of opportunities, particularly in terms of developing transnational transport infrastructure across the continent. So what's the Bank of Ghana doing to leverage on the opportunities presented by the AFCFTA in the infrastructure space?
Well, taking it up from there and from what our colleague Zubairu had said, what he described as the success stories is essentially the successful export-led growth strategies in these countries which we want to replicate in Africa. And I think another dimension of that is the issue of regional cooperation and regional collaboration in development projects such as he described. I mean, these regional projects will be key in the success of the African free trade area. If you look at some of the areas that we can boost intra-regional trade, you would need, transportation. Infrastructure is key to that type of strategy. So really, as you know, the AFCFTA is located in Ghana, and we are very much in the neck of all of that. We are looking forward to make it a success. But I think part of that message, which probably hasn't been drummed in well, is the importance of infrastructure in supporting growth and the need for African leaders to look at the key regional infrastructure which would allow countries to be able to export to each other more effectively. I should also say that we also need to improve on policies that will build capacity, enhance the skills of our youth in be able to contribute to production within our countries. As a central banker, I always come back to the issue of the importance of a competitive and conducive business environment with very effective macroeconomic stability. In Ghana, all the ceilings that we had for ourselves in terms of fiscal ceilings, inflation ceilings, and all of that has been, in a sense, relaxed somewhat because of the recent COVID experience, where we had to prioritize lives ahead of the economy. But I think African governments need to go back to implement some of these fairly strict regimes, which would allow us to create that certainty of macro environment to improve the business environment, which would allow us to attract the capital that would finance some of these large regional infrastructure projects, which would really be the backbone of any successful continental free trade area. Thank you.
Thank you very, very much. I honestly wish we had more time to really drill deeper into all of these issues. But it's a conference. There are other panels lined up through the rest of today. So I want to thank the governor of the Bank of Ghana very much for joining us today and for your very, very useful insights into the issues we've discussed. And I also want to thank Mr. Samaila Zubairu, the president of the AFC, who, as I like to say, is at the forefront of financing development in Africa. So we thank you very much for that. And I'm looking forward to seeing the amazing work that you are doing across the continent. So thank you very much for joining us in this session. Enjoy the rest of your recess.
Thank you
very much, Kenneth. I really miss my days in Cambridge.
Thank you very much,
Kenneth. I really miss my days in Cambridge. And that's why I was keen on participating in this conference.
You're always welcome, sir. You're always welcome, even though the weather is very friendly now.